Hello learners, welcome again to Manifested e-learning platform. Today we are going to continue with our revision, and we are going to look at May 2017 sitting. That is May 2017 question number 3. This question has two parts, that is part A and part B. So let's start with part A. Part A reads like this. Your country has been experiencing growth in a number of projects initiated through public-private partnerships, that is PPPs. However, this growth appears to be declining in the last 5 years. So evaluate 3 possible factors that could have contributed to the above trends. So you know PPP is public-private partnerships, and we said that a public-private partnerships is a collaboration between private investors and the government, and therefore the two parties come together with an objective of offering a public service. But in the last 5 years, the performance has not been so good, so the trend has been declining. So we want to know what has been contributed to this. So in other words, we need the reasons for decline in PPP growth. So one thing that to note that has contributed to this particular change is changes in government. You know, after every 5 years we have a new government, another 5 years we have another new government, and therefore these changes, you find that a new government comes in with its own ways of doing things, and again they affect them the management of this particular PPP. Therefore you find that the performance tend to reduce. So reason number 1 is changes in government or new government. You find that, and we are seeing that when we have such, obviously the management tend to be interfered with. The other thing that you are likely to note that has affected this decline, that is number 2, is decline in opportunities. Decline in opportunities. So you find that again the opportunities have reduced. In other years, in the previous years, we had so many opportunities, and therefore as time progresses, you find that these opportunities tend to reduce, and therefore you will not find many people or many new investors interested in investing in PPPs. The other thing that you'll note, that is number 3, is poor performance by existing PPPs. So you find that those that are existing, again you find that they are not doing so well, and therefore if they are not doing well, then even those investors who are potential, the private investors who are potential, maybe to come and form PPP with the government, so you find that obviously they will not have that particular interest. And the last thing is still you can have inadequate supportive legislation. So again you find that because it's a collaboration, PPP we are saying is a collaboration between the private investors and the government. So you find that the laws that have been put in place, they are not well supportive, and therefore you find that that bond is not doing well, simply because there are no enough laws that can support the same. So that is those are some of the reasons that have made the PPPs to go down. So we can go to part B of that particular question. Wema and Nenda have been learning have been learning whether enterprises as a partnership sharing profit and losses in the ratio of 2:3 respectively. The following is the statement of the comprehensive income for the firm for the year ended that was December 2016. So we have the sales, we have cost of sales, then we have gross profit, other incomes, then we have expenses, and we are reporting a net profit of 1,105,500 shillings. Additional information: the business was converted into a limited liability company trading as Dawadu Limited with the effect from 1st October 2016 and retaining the partners as directors of the new company. The cost of goods sold include opening stock of 576, which was overcosted by 20%, purchases of which was overcosted by 20%, purchases of 2146,000 include VAT at a rate of 16%, closing stock of 675 that is undercosted by 10%. All revenues and expenses accrue evenly throughout the year except for specific expenses relating to Dawadu Limited as a company. Salaries and wages include partner salary of 120,000. Legal expenses comprise of acquisition of company title deeds, acquisition of company, negotiating debenture stock, demand letter to customers, drafting a memorandum of association. Number 6, Wema was paid consultancy fee of 54,000 for installing CCTV cameras in the premises. Advertising expenses include a neon sign of 92,000. The sales figure was inclusive of VAT at 16%. Directors' allowances include commission paid to Nenda of 60,000 for negotiating a business contract. Required separate statement of adjusted taxable profit or loss for Wenda Enterprises and Dawadu Limited for the year ended that was December 2016. Hint: start with the net profit. Number 2, tax payable or refundable by Dawadu Limited for the year ended that was December 2016. So in total we have 20 marks. So we have we want the taxable income for Wenda Limited and Dawadu Limited. So Wenda Limited and so Wenda Enterprises not limited. And Enterprises and Dawadu Limited. Computation of taxable profit or loss for the year ended that 1st December 2016. So we have particulars. So we have Wenda, we have Wenda Enterprises, and we have Dawadu Limited. Dawadu Limited. It's good we create, I think, even the last column, Dawadu Limited. And we can have here total column even if it is not needed. So this question can apply to approaches starting with the sales or starting with the net profit. In this question, we are requested to start with the reported net profit. So we start with the net profit. And this net profit is 11,005,500. And we want the profit for the 2 years. So we need to know when the change took place so that we can apportion that particular profit. And considering note number 1, the change took place on 1st October. So October, November, December. So it took place after 9 months. After 9 months. So here we have 9 months, then 3 months. So 9 divided by 12, you multiply by 11, 05, 1105, 500. So 829, 125, 1105, 500 minus 276, 375. When you start with the net profit, then you are supposed to add back the disallowables. So add back disallowables. Add back disallowables. Considering our question, can start with the additional information. As far as additional note 1 is concerned, the business was converted to a limited liability company trading as Dawadu Limited with effect from 1st October and retaining the partners as director of the new company. So there is no disallowable there. Number 2, the cost of goods sold include opening stock of 576, which was overstated by 20%. So if you overstate the opening stock, then we need to know the effect of that on this particular profit. And if opening stock is overstated, it means we subtracted more stock or more cost of sales. So that overstatement, we add it back. So overstated opening stock. Overstated opening stock. This overstated opening stock, we need to get it. It is 576. This is equal, it is overstated, so it is equal to 120%. So overstatement is 20%. So we do a cross multiply and we get this particular figure. So you have 576 times 20 divided by 120. So this overstatement is 96. So 96 here times 9 divided by 12. You get here 72. So 96 minus that, you get 24. 24. That's fine. The other one is purchases of 2146 is inclusive of VAT. VAT is not deductible. So again, we add it back. VAT on purchases. VAT on purchases. So this VAT, it is 2146. 2146, it is equal to 116%. So what is 16%? So cross multiply again. So 2146 times 16 divided by 116. So it is 296. 296. 296. 296. Then times 9 divided by 12. You get 222. So 296 minus that, you get 74. 74. The other one is at the closing stock of 675 was understated by 10%. So if the closing stock is understated, then it means we take opening stock, we add the purchases, we less closing stock that is understated. So that made the cost of sales to be high. And if the cost of sales, it means we subtracted more. So we add it back. And again, understated closing stock. It made the profit also to be high. So this is 675. 675 is equal to 90% because it is understated. So what is 10%? So 675 You multiply by 10, divide by 19. That is 75. Higher times 9 divided by 12. You get 56, 250. So 75 minus answer 18, 715. That is the end of that note. Note 3, all expenses, all revenues and expenses accrue evenly throughout the year except for specific expenses relating to Dawadu Limited as a company. So those expenses that are related to the company, they should be adjusted on the column of the company. Number 4, salaries and wages include partner salary of 120,000. So partner salary is not allowable. So you capture partner salary. Partner salary is 120,000, and partner salary is not allowable in a partnership. It is supposed to be taken to the partner's allocation schedule. So for a company, we don't have a salary. So that is a specific expense on the partnership. Number 5, legal expenses comprise of acquisition of a company title deed. Acquisition of a company title deed is not allowable. Acquisition of a company title deed. The cost is 50. So 50, that is 9 divided by 12. You multiply by 15. So that's 7,500. This is 12,500. Then debenture stock, negotiation of debenture stock is not allowable. Debenture stock, that is 100,000. So debenture stock, debentures, that is 100, that is 9 divided by 12, multiply by 100. That is 75, 25. Demand letter to customers is allowable. Drafting memorandum of association, again, is also allowable in case of a company. Number 6, Wema was paid consultancy fee of 54 for installing CCTV cameras in the premises. So consultancy fee, that one should be treated as a allowable cost, but Wema here is a partner, and therefore that cost should be treated as a disallowable. So consultancy fee, it should later be included as part of the, you disallow it here, you include it in the partner's allocation schedule as income for Wema. So that is 54,000. So we have 9 divided by 12 times 54, 4,500. 13,500. The other one, we have advertising including neon sign. Neon sign is not allowable. Neon sign. The neon sign here is 92. So we have 92 times 9 divided by 12. We get 69. That is 92 minus 69. You get 23. The other one is the sales figure was inclusive of VAT at a rate of 16%. So that one we are going to less, but let's first of all finish with adding back. Number 9, directors' allowances include a commission paid to Nenda of 60 for negotiating a business contract. So Commission to lender is not allowable. Commission to N. This commission to lender is 60,000. So 9 divided by 12, you multiply by 60. That is 45 and 15. That's the end of the additional note. So we move to the question. In the question we have purchase of CCTV cameras, not allowable. CCTV cameras. CCTV cameras. 96. And 96, that is 72. And this is 24. Impairment, loss on go down. Impairment is not allowable. Impairment of go down. That is 124,600. 124,600 times 9 divided by 12. 93,450. 124,600 minus that. Get that one. 150. The other one is website development. We have 130. 130. So 9 divided by 12 times 130. 97,500. So 130. 32,500. The other one is debenture interest allowable. Audit fee allowable, salaries allowable, direct allowances allowable, legal expenses allowable, loss on rented property, that's not allowable, loss on rented property. Loss on rented property is 36,200. 6,200 times 9 divided by 12. The other one is purchase of foreign currency. No. Purchase of currency. 344,900. So 344,900 times 9 divided by 12. 258. 675. 344,900. The other one, advertising allowable, purchase of computers allowable. Sorry, not allowable. Purchase of computers 180. 180. So 180 times 9 divided by 12. 135. Then 180 minus that, 45.
Thank you for watching this video. Don't forget to get yourself a copy of our professionally prepared study text and revision partners. Visit our shop along Tom Boyer Street, Pioneer House, 3rd floor, opposite Fire Station.